Hello, this is Chuck Carnevale, co-founder of FastGraph's Fundamentals Analyzer software tool. The old saying goes that statistics don't lie, but statisticians are darn liars. And when you look at Ford Motor Company, I'm going to do a FastGraphs Analyze Out Loud video on Ford today as a subscriber request, a FastGraphs YouTube channel subscriber request. Statistically, this stock looks great. So let's look at it. First of all, forward price to E ratio is 7.1. Its blended or current trailing 12-month PE ratio is under 6. It only trades at 1.2 times book, and it offers a 5.33% dividend yield. Now that looks awful enticing to most investors at first glance based just on the statistics. However, let's take a look at Ford through the lens of FastGraphs, the Fundamentals Analyzer software tool. The statistics that are quoted on FastGraphs actually look a little better. Our blended PE ratio, which includes past, present, and a little bit of future forecasts, is 6.8. Our dividend yield, which is more forward-looking, shows a dividend yield of 6.5%. It's a $44 billion company, BBB rated. So once again, the statistics look good. But what I want to bring the viewer's attention to is look at the long-term history of this company. Let me take price off of this graph and normal PEs. And I'm going to take dividends off, and let's just look at the company's earnings. What's really difficult about automotive companies are that they're very cyclical, they're capital intensive, they sell big ticket items. It's very, very difficult for these companies to grow. So you can see that Ford actually has a negative long-term minus 8.2% growth rate. Now, if I shorten this graph to more recent times, it looks better, but I do want you to notice even more recently, since 2014, Ford's earnings growth has only averaged minus or a negative 0.6% a year. If I shorten this just for the last couple of years, which is 2016, 17, with a forecast for 18, we're back down to a negative 4% growth rate. I also want you to look at their long-term dividend record. So here's their dividends with the payout ratio. You can see that they actually cut their dividends several times back during the recession of 2001, completely eliminated it coming into the Great Recession, and then reinstituted a dividend in 2012. And since that time, their dividend record has actually been pretty good, other than it's expected to drop again in 2019. Now that's a forecast. I want to make it clear that's not necessarily real. Everything without an E on this graph is actually real. Now let's bring monthly closing stock prices on the graph and look at it, because what's important here that I want to get across to the viewer is that where earnings go, stock price tends to go. So if you look at Ford, back in 1999, it was trading at almost $34 a share. And this is split adjusted for the 7 splits that Ford has had. They had a split the last split was in 2000, but their previous splits were in 1997, which don't show up on this graph. But here we do show this last split. So these are split adjusted numbers. But what I want you to notice is if you look at the long-term performance, and I always like to look for stocks that are long-term investments, stocks that I can buy and hold for the long run because I believe in the business and believe in the company. I think Ford is obviously a decent company, certainly one of the best automotive companies, but it's certainly not been a great long-term investment. Let's look at the track record. A $10,000 investment in Ford on December 31st, 1998 would have shrunk to $3,350. They would have paid you $2,400 in dividends, and I'm just going to use round numbers here, which means that you would have lost just a little less than half of your money. That's a negative 2.8% compounded rate of return since 1998. Now, if I go back to this shorter time frame and look again, statistically, it looks okay. The PE ratio looks low, the price looks low, but let's look at its performance just since 2014. A $10,000 investment made on December 31st, 2013 would have still shrunk to $7,291. You got some dividends, but you're still underwater on this investment and certainly massively underperforming the market. The problem is it's very, very difficult to make money in this particular industry, as you can see. Now, just for contrast, I'm going to go ahead and put General Motors graph up here because they did something very interesting. General Motors essentially, went bankrupt and took all of their history and kind of hid it from view. And this is what General Motors looks like now since 2012, and there's what they look like since 2013. Once again, we have good statistics, but if you look at this stock long term, it's obviously not been a great stock. The company went bankrupt. Now, going back to Ford, since it's a dividend paying stock, let's look at free cash flow. You can see they went into negative free cash flow and had significant volatility or cyclicality in their free cash flow to the point where it's a very, very difficult company to predict and a very, very difficult company to forecast. Analysts expect free cash flow to virtually disappear next year and the year after. And you know, it's one of those companies that's just very, very difficult to forecast, very, very difficult to analyze. The statistics look great, high dividend yield, low valuation, but the real key is, you know, what can you expect Ford to do in the future? I consider this a very speculative investment, and as a result, I've never owned a pure automobile company, whether it be Ford, General Motors, or any of them. This has been Chuck Carnevale saying I hope you enjoyed this video and it gave you some insight into, you know, what the automotive sector is all about. Also, if you've enjoyed this video and enjoy the Fast Graphs research tool, you can learn more about it by either calling us at this phone number, 813-960-9600, or go to www.fastgraphs.com and, you know, sign up for a free trial. We'd be delighted to help you. Also, since I'm trying to build this YouTube channel, this is a subscriber request series here. I was asked to review this stock. I normally wouldn't review a company like Ford, but if you enjoyed the video and think it's helpful, you might want to share this with your friends. This has been Chuck Carnevale saying thanks again for watching.